Very excited to be here. I'm Johnny Reinsch, and we are all here because of Bitcoin. Trust me. I'm the executive director of the Tokenized Asset Coalition. I have the unenviable task of distilling all the news about tokenization every week from about 1 million words into 200. You can follow us at tokenizedassetcoalition.com. I encourage you to do so. And today we are talking about where the most latent liquidity for on-chain native capital markets formation exists, which is on Bitcoin. And right now there's roughly 2.3 trillion of market cap, and there are a lot of Bitcoin holders that literally never sell. We were talking back in the green room about casacious coins, and that's how far back holders go, is the early days. So this panel, we're gonna discuss real world use cases for Bitcoin and try and dispel some misconceptions as well. And I think the first thing that I wanna dispel is around performance and lack of programmability. And to do that, we have some amazing folks to do that. So why don't we start with just a quick intro about yourselves and your project, and then we'll go into the questions about how we get over performance hurdles and programmability. Arnab, why don't you start?
So I'm the co-founder and co-CEO of STOKR. STOKR is an asset tokenization platform based in Europe. We are regulated in Luxembourg I think we started in 2018, 2017. Prehistoric, I would say, in the RWS space. And we are quite interested in, for a long time, in Bitcoin derivatives and Bitcoin structured products. And the thesis is, if you have a 2 trillion plus asset class, you will have a few hundred billion of derivatives. And why not we tokenize that? Because underneath the product that is a Bitcoin is effectively on-chain, right? And you can create very interesting assets on top of it. If you think of a Lego bricks, you can create a number of interesting assets. And that's what we started doing it. We now have over 1.3 billion of assets under our infrastructure, which we tokenized. And we are also tokenizing on a Bitcoin layer 2 liquid network, which is a sidechain effectively in that sense, and developed by Blockstream. And Adam has been a key figure behind that. So that's about STOKR. That's about us, what we're doing.
Elan Nahari, one of the co-founders of BitcoinOS. We work primarily to bring programmability to Bitcoin. There is a strange situation in the crypto space today in which a blockchain is simply a ledger for managing digital property. The one that is far more secure than anyone else is Bitcoin. It is in fact the most secure digital network that was ever created. But right now it's being massively underutilized, only to manage the transfer and ownership primarily of Bitcoin assets. We believe the opportunity is so much bigger in terms of what this digital network can do. And our goal is to bring programmability, or in other words, bring eyes and a brain to Bitcoin to allow it to see the external world and to adapt and react to the external world. Essentially combining it with the larger crypto space and the larger financial sector.
Amazing.
So I'm the co-founder of Blockstream, and Blockstream does Bitcoin layer 2 things. So Lightning, we have Core Lightning, which is I think it's technically the first Lightning implementation to run with live value and offer a web store and this kind of thing, which originally earned us the accusation that it was reckless. So, of course, somebody made a hat that says reckless Lightning. And then the main activity we do in Bitcoin Layer 2 is Liquid. So as Arnab mentioned, Liquid is a sidechain of Bitcoin. So as we like to say, it's innovation without speculation. So there is no new asset introduced by this. The fee asset on Liquid is Bitcoin, and there's a way to transfer Bitcoin between the main chain and Liquid and back again, sort of similarly to how there is an interaction between Lightning and Bitcoin as well. And actually there's a triangle now. So there's a company that specializes in rebalancing Lightning channels using Liquid Bitcoin because it's more efficient. So different kind of use case on top of the same tech. And then basically with Liquid, to get intuition for what it is, it's a federated sidechain. So there's a group of companies that are operating HSMs that sign blocks. So in other chains, they call that validation. And and then it's organized like Bitcoin. So it's a very Bitcoin-like experience with addresses. The features on the chain are an extended version of Bitcoin script with the ability to handle other types of assets like stablecoins, real-world assets, tokens representing anything you want, really, and a very elegant and robust way to handle regulated assets. And so STOKR, I think, is probably the largest share registration agent by volume of onboarded users and value that they're the licensed share registration agent for these. And so there are some public market stocks like MicroStrategy, MetaPlanet, and more in the pipeline, which people are able to trade in different liquid wallets in a trustless way. And basically, it's very simple on the chain. It's just a multi-sig. And the share registration agent cosigns if you're enrolled. And if you're not enrolled, it says, well, you have to enroll to receive this asset. So the result is quite a nice picture in the end, which is that you have a token that behaves very much like a Bitcoin for uses, and you can build simple contracts and swaps on top of it. And embedded within it is, the enrollment process and so on. So once you're enrolled, it feels very similar.
Gotcha. Over 10 years ago, I had a mentor that once told me that everything that was being built on Ethereum, which was a white paper at that time, would ultimately migrate over to Bitcoin. And it sounds like Liquid can help with reducing 10-minute block times and introducing things like programmability. Arnab, do you want to chat quickly about some of the deals that you guys have on Liquid via STOKR and how that actually functions kind of at the chain level?
Yeah. No, I think that when STOKR started in 2018, we started with Ethereum actually, right? And that time Liquid was not there. It came quite late. We looked at a lot of EVM chains, and 2021 onwards, we took a very conscious call to look into the Bitcoin side. And there are a few reasons. One of the reasons is if you consider gold as a store of value, but gold never had a settlement layer, effectively, right? For the first time with Bitcoin, we have a store of value and a settlement layer. Now, imagine if it can be, if that's the case, you have a huge opportunity for capital market infrastructure to be built on it, right? And then it becomes obvious question is why not we build on top of Bitcoin layer 2? And then Liquid that time was kind of coming into the discussions, and there was some very interesting stuff happened. And we started experimenting, and the first product we started looking into was a securitized Bitcoin mining hash rate, right? It's a very abstract concept, right? But my background is I worked as a lawyer actually, and I had
You're
some
a
clients.
lawyer.
I'm a lawyer. Actually,
Lawyer, ex-lawyer.
Yeah.
Barely lawyers. Adam, are you a lawyer too?
No, I'm a computer scientist.
Okay. None of this is legal advice. Okay.
The only smart guy, in the room. So and the only person who is not afraid of numbers, right? So in that sense, for us, what we did is effectively we securitized the hash rate. So consider it's 1 petahash per day, multiplied by number of 365 days, multiplied by 3 years. It gave you a product that gave you access to the mined Bitcoin based on the hash capacity that you buy. It's a very simple instrument, and that product we launched in 2021, paid out in 2024, 80 million in Bitcoin. That product was one of the biggest, it made the biggest payout in the RWA history. It outperformed Bitcoin by 32% in a 3-year period. And based on the success of the product, we launched the BMN2 last year, and now the size is around 700 million. It's one of the largest RWA product, I think in the top 5 in that sense, right? And it's a very innovative asset class because in that asset class, you can see the performance on a daily basis based on the mining rewards, and you actually get the mined BTC, not the converted BTC at the end, but you get the mined BTC, right?
And so the yield is actually paid in BTC.
In BTC at maturity, yes. And that's kind of where we worked last year heavily, and we got a huge success. But beginning of this year, we started getting demand is, hey, why not we kind of borrow against the BMN or borrow against this collateralized hash rate or securitized hash rate? And we have now around 500 million worth of fixed income products, BTC basis yield that is providing around 9.7%. And there is a dollar basis yield that is providing 18%. So it's a very interesting product. So what effectively BMN or the hash rate backed securities give is a layer 1 product on top of which layer 2 and layer 3 products are being built. And these products can actually survive effectively infrastructure like Liquid because we can program a lot of things like the payouts, infrastructure, like NAV calculations and all these kind of things. And at maturity, when we send the BTC out, we don't have to use a wrap BTC. It's effectively much more secure form of BTC, that is LBTC, which doesn't rely on a single custodian. And that swap between securities and the payouts is fantastic. Like, and this is we did number of payments. Like this year, we paid out over 100 million worth of stable coins and BTCs. And this all happens on Liquid in a very instant manner.
Interesting. And so basically you can invest in BTC, get yield paid out in BTC, and then borrow against your position.
Yes, exactly. So we actually also securitized MicroStrategy and tokenized it, right? That we did 2 years back. And the interest that we got from the market was, hey, MicroStrategy is correlated to Bitcoin, but we cannot trade against Bitcoin. And after trading hours over the weekend, the Bitcoin was the most volatile. Can I trade against BTC? So we said, okay, we can do something. And we securitized that and we tokenized it on Liquid. And we saw over the weekend, that's what the volume happens when the Bitcoin is the most volatile. And then we started tokenizing all the Bitcoin treasury. And now we are very interested and excited to announce one product that we did few months back. We announced with a public company in Europe. It's a tokenized Bitcoin basis convertible note. So you buy the converts, it's a treasury company that is issue convert, which you buy against the BTC, and the BTC does not convert to the share till the time strike price is reached, right? This kind of product can actually survive in tokenized form much more efficiently than in legacy infrastructure. And we're quite excited that these products are being built actually on top of the liquid infrastructure kind of platforms.
And is your customer of that is probably fairly institutional, like institutional trading? I'm curious for Elan and Adam, are there barriers to institutional adoption or developer adoption by nature of building on BTC that people have to overcome in order to, again, unlock this sort of multi-trillion-dollar bit of potential liquidity?
We have seen hedge funds participate in Bitcoin funded instruments like Bitcoin basis convertible notes. So, you might think, well, that's going to be Bitcoiners, but there are also hedge funds that hold Bitcoin that, are quite happy to fund an investment using Bitcoin, which has got some Bitcoin correlation. So they're basically maybe running a Bitcoin alpha fund or something like that. So there are a lot of hedge funds around these days which are trying to create alpha on top of Bitcoin. And so they are happy to trade in these things. I think, the ultimate point is to replace... we think of Bitcoin or Bitcoin layer 2 like Liquid as the future of finance running on Bitcoin. Technically Bitcoin layer 2. And so, if you ever tried the experience of transferring a share from, E-Trade to Schwab or something,
right?
It sounds that you can hear the sound of the fax machine in the background, right? It will take a few weeks. There'll be some emails. There'll be some humans, and it will be very slow. And in the meantime, you're trying to do some trading activity, right? You're trying to move some liquidity from here to here, and you've got a 2-week lag. That's not good. So with the technology that Arnab is describing, it's like the speed of Bitcoin, actually even faster, right? In a minute or two, you would be able to move shares. And so it's the new share certificate or digital asset certificate, which is you can, store it in a hardware wallet. You can trade from the hardware wallet. You can deposit onto Bitcoin exchange like Bitfinex that supports, that has a securities license and will enable you to trade those kinds of securitized and tokenized shares against Bitcoin, against dollars, presumably in the future, to use margin against them, to have perpetual futures denominated in them, and see the evolution of this 24/7 market. So the MicroStrategy example has been running, I think, about 15 months, 18 months, something like that. And it's priced in Bitcoin and it's traded 24/7. And, in Europe, there is an ADR, a Frankfurt ADR for MicroStrategy. And the CMSTR, as it's called, it matched a Frankfurt trading volume, but on a weekend, which is pretty nice to see. Whereas, it's mostly Bitcoiners trading it, so they'll trade it heavily when there's something changing between the ratio of MicroStrategy and Bitcoin that they want to buy more or they want to cash it out, something like that.
Yeah, you basically arb over the weekend. Mm-hmm. Yeah.
I think, Bitcoin is the first real bearer asset. And that's a very scary thing, right? If you lose your private key, then there is no recourse. It's gone. For many institutions, this is a big barrier. And so they rely on the custodians. And I think they face two primary risks. One is regulatory, but I think that's being solved, especially in the last 2 years. And blockchains, inherently in their design, are good for the regulator. The other thing is counterparty risk. And counterparty risk, both in terms of who you're conducting business with, who your custodian is, I think is probably the biggest barrier. But the appetite is there. If you look at custodians today managing billions or holding billions of dollars of Bitcoin, most of that Bitcoin, the vast majority, is dormant. It's just sitting with the custodians and isn't being utilized for any other more sophisticated financial instruments. So our hypothesis is that if you solve the counterparty risk aspect, then you can tap into that latent demand. So one of the things that we're doing is integrating with the custodians themselves, with the ultimate goal being that you as a financial institution, you're managing people's money, you're managing pension funds, you're definitely interested in Bitcoin. You're looking for ways to get into Bitcoin, and that's basically what all these treasury companies are. It's putting this mold of TradFi on Bitcoin so that people will have access to these instruments.
Right. So the 401k can actually take exposure.
Exactly.
For instance.
But there are plenty of middlemen in the middle there, and additional risk, which adds additional premiums. So if you can go directly if you can access decentralized liquidity pools with your Bitcoin, if you can trade it over multiple different venues, whether they're centralized or decentralized, directly from your custody account, you're in compliance with your internal controls, but now you're able to bridge that gap which exists, which is you have all of DeFi, you have this centralized world, and you can see this in the yields that you can get on Bitcoin for each. There is a constant search for liquidity. Liquidity is king. And there's a lot of liquidity in these decentralized pools. They're not tied by any jurisdiction. You as JP Morgan can access liquidity in Asia, in China, in Russia, in places where you have no bilateral agreements. And so there's definitely interest there. The question is, how do you solve that technical aspect of reducing the counterparty risk such that it makes sense?
Yeah, no, that makes sense. And then on the institutional use case, which I think we've covered really well, what about for everyday people? So there's a narrative that I'm starting to see form where folks want to use Bitcoin without selling it, but to buy a house or just pay that mortgage, for instance. Where do you guys see those products forming? And how do you think we'll be able to support OG hodlers in just leading their everyday lives?
I mean, there are some companies working on sort of sophisticated financial models for providing Bitcoin-related mortgages. So I think, generally speaking, to my perspective, borrowing against Bitcoin to buy a house, which is an illiquid asset, is a quite risky idea because of the volatility. But they have developed, for example, Milo and New Market, which is a battery fund, have models which look more like they are giving you the loan against a combination of the collateral value of the house and a bit of Bitcoin over collateral, and then providing a relatively low normal interest rate. Because usually the problem with Bitcoin is people want to charge you a super high interest rate because the prevailing funding rate for Bitcoin is high.
Right.
But they offer you a low, normal low interest rate. But the trick is there's a shared reward in the Bitcoin. So, if you close it down in the first year, you might give 50% of the upside to the mortgage provider, but it drops 5% a year. And they want you to stay in it for the long term, right? So, if you stay in it for 5 years, then you're giving away 25% of the upside, and so on. So there'll be some schedule that's negotiated and it will affect the rates. And so it's a sort of equity release. I've seen similar kind of concepts for startup stock offered by Second Market and Nasdaq and things like that, where they provide liquidity to private companies, except Bitcoin is already a liquid asset. Of course, the mortgage provider is very Bitcoin interested. They want the Bitcoin upside, but they can make something win-win. So, for example, if you were to say, philosophically, it's like writing a call option or something, right? That you philosophically, I might sell some Bitcoin at this price. You can get paid for committing to that now. So here you're able to use a commitment to sell at a certain level years in the future to get the equity released by the house today. So it's something like that.
Kind of reminds me of like the early options contracts for Bitcoin miners, like over a decade ago.
Mm-hmm. Yeah, and on the institutional topic from before, Blockstream Capital Partners, which is kind of affiliate company, made an investment in Kamino, which is an institutional grade custodian, and with that they are integrating support for liquid in the custodian, and so it's quite a nice way to interface the traditional world into the digital world. So as Arnab was saying, liquid, securitized, and tokenized shares, real world assets, Bitcoin derivative contracts like the hash rate contract, in a way that a traditional financial company, hedge fund, a public market financial company can interface to, which is all of the assets they hold are held by custodians. And so here you have a custodian.
So an RIA can actually invest on behalf of their clients.
I mean, we did see it in the early days with the BMN. So Blockstream has a sister company, which is Blockstream Mining, which is the that company was the issuer of the BMN one. And with that, there were a range of investors, from individuals to funds, and even like public companies and larger companies. And it was a little tricky at that time because for some of them, they didn't know how to receive a Bitcoin or a liquid token. Sure. So they were like, is there a custodian that can take that for us, right? So nowadays there is. And I think STOKR also introduced the option of kind of token optional. So they're licensed ability to act as a share registration agent. I believe, it's the case that you can hold the shares without issuing a token on their behalf. So, a kind of a version of a custodian for some kinds of assets.
So meeting the customer where they are, they can be on-chain native and manage keys and use a wallet, or they can go through the custodian.
Right.
And I don't know how well known this is. I know this from chatting with folks on your team, but the amount of value that's on Liquid right now is roughly $4 billion spread across the product that you guys structured together. And talk about some of the other assets that you guys are working with.
So there's, maybe 50 to 100 million of public treasury stocks in the securitized format, and some more in the pipeline. And the hash rate contract, the kind of corporate debt, which is securitized as a bond on the network. And then a biggest one actually is something by Mifil, which is a Mexican company that is doing promissory notes, so small business loans in Mexico. The capital is coming from two very large public company financial institutions in the US, and that's around $2 billion of debt. It grows about 100 million a month just organically. There's they basically were switching from a paper-based solution straight to the digital world. So it's kind of like people switching, from not having phone lines to going straight to mobile kind of thing. So it's that phenomena, and it solves a problem for them, right? They've got a DocuSign for the loan. They've got a digital certificate for the promissory note, and they're about 30 non-bank financial institutions are placing the loans, and they're resellable. So they could, resell that to somebody else. And there's a lot of demand for the capital. Evidently, the terms are satisfactory to both parties. So it's growing quite quickly.
Wow. And I think one interesting part is I think the Liquid has already an exchange like Bitfinex Securities supporting as one of the oldest exchange supporting Liquid issued securities, right? And we saw the first product that got listed on Bitfinex Securities was issued on STOKR, that is the Blockstream Mining Note 1, as Adam mentioned. And we saw a very interesting actually trend there is the volume of trading on the DEX platform, that is another platform called SiteSwap, was more than the volume on the centralized exchange.
Really?
We actually thought it would be other way, but it just happened in the DEX, the volume was much more higher. But we also see kind of this is where becoming more, and one of the interesting angle when institutions come to us and talk to us about issuance of liquid issued securities or investing in that product, one of the key part is a confidential transaction, right? Because institutions are not eager to tell what they're trading, when they're trading, right? That's the reason a lot of early days blockchain discussion, and this is perfect for the Bitcoin versus blockchain debate, was people thought Bitcoin is much more smaller than the blockchain and you need to use blockchain. And there was an era of private blockchain, right?
Yeah.
That was 2016, 15, and that era.
We might be going back into that, frankly.
And one of the main reasons for that was privacy concern, and I understand that, right? And the Liquid actually solves that in that direction, right? Because on Liquid, you know something has moved from somewhere to somewhere, but you do not know what asset and what is the value of the asset, right? And that's very it gives comfort to the institutions that there is a front runner or there is no other institutions are trying to copy the trade or something like that, which is very important for them. So this is one key selling point, which we found very interesting because a lot of people are talking about zero knowledge and solving that. But on Liquid, we're using it from 2019 on a production basis, right?
Yeah.
And we never had any issues on that, to be honest, till late.
Amazing. I know we're over time, but I want to give everybody an opportunity to do a hot take or a last word. Why don't we start with you, Adam?
Well, I don't know if it's a hot take, but I think for anybody investing in anything, basically, Bitcoin is the hurdle rate. So if you can't outperform Bitcoin, you should stop what you're doing, sell those things, and buy Bitcoin and hold it.
Not investment advice, but he's right.
I agree with Adam wholeheartedly. However, if in 2025 you haven't bought Bitcoin and hold your own private key, the likelihood of you doing so isn't very high. And adoption in the space isn't measured by users, but by dollars. And your pension fund and your brokerage and your bank are going to be offering you Bitcoin derivatives, Bitcoin-based instruments within the next couple of years. And that's where the next wave, the massive wave of adoption is coming from.
Amazing.
I personally see a lot of stablecoin volume will come to Bitcoin infrastructure.
Plasmas raise 1 billion or 500 million, then 1 billion shortly thereafter.
Exactly. So there was, if you see that way, if you have a cash on chain and USAT now is a trillion kind of vision in that direction, you will require the capital markets to be also on chain, and then you have that to make swaps. So Bitcoin infrastructure is the go-to place for tokenized securities, right? So anybody who is looking into tokenized securities, I would say look into Bitcoin, and you can actually create a lot of interesting fun products, right? Private equity with Bitcoin, real estate with Bitcoin, gold with Bitcoin. So yeah, there's a lot of things you can do and start experimenting, I would say.
Amazing. Well, capital formation on chain, there's a lot of latent demand sitting in Bitcoin. So chat with these guys about how to get and tap into that demand. And by the way, if you've been sitting at the conference for 2 days straight, we're doing a real world asses exercise group at Barry's Boot Camp tomorrow at 7 a.m. Come find me if you're interested. And thank you guys so much for being here. Let's hear it.